Welcome to Let's Learn Crypto 101, where we cut through the noise and make sense of the stories. Now, I see a lot of people a little bit upset with how the prices are going at the moment. Here's the thing, you've got to understand how money works to feel more comfortable in this space. So one thing I would say, chasing money without a purpose is like sailing in an ocean without a compass. You're going to move, but you're never going to arrive. So to really put effort into understanding why the money is flowing the way it is will really help you feel a lot more comfortable. So what we're going to do is we're going to go through a load of stories that have popped up over the last week or so, just to remind people of the adoption that's going on. Now we're going to go over the tariffs, we're going to go over, there's a Mastercard story, there's IMF, and then we've got a bit of Ripple news. So there's a lot of interesting stuff going on out there just to keep an eye on, because it shows you what direction we're going to be going in. Price is miserable. However, over the last few days after the tariffs, there are some really interesting things going on. Let's look deeper into this, but I will explain it more on the Trump tariff story. Let's go. The number one story around the world right now is the tariffs that America is imposing on the whole world. It is a wild story, but you can make a lot of sense, and we're seeing things start to play out that do also make sense, again, when you understand how money flows. But there are some surprises as well. Okay, so Trump comes out, announces a load of tariffs. He did inform the world he was going to do this. I don't think anyone really believed how big they were going to be, but he did. Now, this sent shockwaves through the stock market, and the stock market has been absolutely murdered over the last few days, but it makes total sense. So for example, if you are going to buy a company, bearing in mind that stock is valued based on how much profit that company is going to make. But now with these tariffs, say for example with an iPhone, you buy Apple stock. So you buy Apple stock and it's got its value based on, okay, how much profit is it going to make? How much growth is it going to be in the company? Well, now there's tariffs. Say an iPhone is now 50, 100% more expensive. What does that tell you as an investor? It tells you that company is going to sell less product. Its costs are going to be higher. It now has a bit of time that it needs to restructure the business. Is it going to move factories to America? These are all extra costs that are going to take down the profitability of that company, meaning the stock sells off. It makes sense why that's happening. That's happening to all stocks at the moment as well. So then you go, okay, I'm selling out of this stock. I've sold into dollars. Where do I put that money? So traditionally you go, I'm going to put it into the next safe haven asset, which is gold. A lot of the time, gold is seen as the safest asset. Well, there's two. One is US Treasury bonds and one is gold. Now we saw gold going on an absolute tear leading up to the tariffs, but it has now sold off. Now, that was a little bit of a shock. A lot of people have said, well, why is gold sold off? But if you look at it, gold was already pretty high. It was pretty overbought. There's another thing here to consider. If you're a gold miner and you have a load of gold stock and you want to export it, you now have tariffs imposed on you. It's now more expensive to produce gold. So you might be thinking, well, I'm going to reduce my production of gold now. So then you would think, okay, if the supply of gold is going to reduce, the price of gold should go up. And yes, that may happen in the long term. But initially, the gold miners' costs have gone up, including things like not just importing and exporting gold, it's importing materials like chemicals needed to mine the gold, machinery, manpower, all this kind of stuff. It's going to start costing them a lot more money. So what do? If you know as a business you're going to be reducing your production, you sell off your current stock to maintain profits. So you've got enough of a cash flow to maintain your business if you're going to be selling less. So looking at the gold market right now, it is coming down. I think people are anticipating this. People in the know are looking at that and thinking, you know what? And I think a lot of that is the supply of gold being dumped on the market. And so now as an investor, you've got your money, you've sold out the stock market, you can't put it into gold. Then you're thinking, right, I'm going to put it into the next safest asset, which is treasury bonds. And we are seeing this happen. The yield of treasuries is coming down. And so you can actually see that the money is flowing in there. So the interest rate is now below 4% for a 10-year treasury bond. Why is that important? Well, because the interest rate on the 10-year treasury yield directly impacts how much borrowing cost is going to be. So let me explain. If you're a bank and you're going to lend money to a business, say, and that business wants to borrow the money to grow its business, which increases the economy, you are going to look at the 10-year treasury and say, hey, if I can get, say, let's use a figure of 5%. That's risk-free also. It's seen as the safest asset in the world. So if that's risk-free, I can earn 5%. I'm going to want to charge 8% to make profit. Remember, banks are for profit. I'm going to want to charge 8% to anyone who's going to want to borrow money. And this can impact mortgages. It can impact companies trying to borrow money to grow their business as well. But what happens there, you get two things. That cost is passed on to the consumer, or that business decides not to borrow that money. So things slow down. But the creation of money is taking on debt. Remember, money is debt. It's a lot to get your head around. I explain this on the course I teach, but just for the purpose of this video, just accept that the creation of money comes from taking on debt. So if banks are now looking at the treasury yield coming down, they're more likely to think, okay, I will charge a lower amount to businesses and consumers, meaning more people start to take on debt, meaning the economy can start to grow. But the key here is more debt is created, meaning the money supply increases. That's what's good for cryptocurrency, because the more money that is in circulation, the higher the devaluation of currency is, the better chance money is going to flow into cryptocurrency. So there is a big picture going on here. But also, if you consider this, you now have taken your money out of assets and you're thinking, where do I put my money? You're going to be looking at the stock market, which is traditionally where a lot of people put their money to get a better interest rate than treasury bonds. And you're going to be thinking, well, how long are these tariff wars going to go on for? Because some countries have come back saying, hey, we're going to remove all of our tariffs, and so that you remove yours from us. Amazing, great idea. However, there are big economies that are like, screw you, we're going to put more tariffs on top of you. So that creates this trade war that we may or may not be going into. And I don't care what anyone else out there is telling you, nobody knows what's going to happen. Absolutely nobody knows what's going to happen here. So at the moment, we've got some big economies coming back saying, hey, we're going to increase the tariffs, so we have a trade war. How long is this going to go on for? And as an investor, I will be looking at the stock market and thinking, who knows how profitable these guys are going to be and how long this is going to last for? Because it could last for 2, 3, 4 months. It could last years. We just don't know. And the profitability of these businesses is going to be massively affected. So we've got to wait and see what happens. But the reason why this was incredible for crypto, stock market started to dip, gold was dipping, but Bitcoin held steady, held strong in the range it's been in for quite a while. What does that say? There is confidence going into Bitcoin and crypto. Because here's the thing, you buy Bitcoin and you want to send it across the world, do you know what you don't have? You don't have tariffs. So you have a store of value that you can send across the world instantly, doesn't have tariffs, there are no borders, and it's holding its value pretty well at the moment. So it's interesting to see this happening. Is it decoupling from the traditional financial system? We don't know. We've got to watch this play out. But wow, it is really interesting to watch, and we're watching it real time. So if you're worried about price, don't be. This is incredible to see. Okay, the IMF updates the world to say Bitcoin is like digital gold. Now, did this actually happen? Kind of. It's not as straightforward as saying, hey, Bitcoin, we're now going to recognize it as digital gold. But first of all, what is the IMF? Well, if you imagine the banking system, so you have the commercial banks that you and I may use for mortgages, current accounts, that kind of stuff. They're at the sort of bottom. Then you have the central banks. The central banks are in charge of all those local banks within that country. So the central bank is in charge of all the banks in that country. The IMF, so remember, every country around the world has a central bank. The IMF, the International Monetary Fund, is sort of in charge of all of those banks. It's not directly, it can't just walk up to them and say, do what we tell you. But it seems like an industry standard. They push out regulations, ideas, suggestions that other banks should follow. And they do tend to follow them. Now, where they get a lot of their power from is if they go to a developing nation and that country wants to borrow some money to expand its economy or something like that, it'll say, can I borrow $100 billion? The IMF will give them that money, but will say to them, yes, however, you have to adopt all of these standards. So it puts them in debt to the IMF, and they tell them what to do in that way. So they do have a lot of power, the IMF, but the main thing they do is they write reports and send them out to all the central banks as recommendations. Within that is what's been said here. So it's the IMF updates global standards to include Bitcoin. But actually what happened is they put it together in a report, and they actually categorized, well, what they said is new digital assets designed to be used as a means of payment or act as a store of value. So it's not directly saying Bitcoin is digital gold, but it is sending this information out there to other banks to say, hey, it's time to wake up. These assets are here. It's start to, need to consider them. But the big point here is banks are now able to custody cryptocurrency. So you can see how this is all starting to change. But why is this good for crypto? Well, these guys who are in charge of the global banking system, in a way, are waking up to digital assets. They're realizing that they are not going anywhere. There was a long period of time where banks would say, hey, you can't have crypto, we're totally against it. But now the guys who are in charge of all the banks are starting to wake up to this. So it makes it more likely that banks are going to start becoming friendlier to cryptocurrency. But if you remember this, that Bitcoin and crypto are limited in supply. So if banks start to wake up to this and recognize this and think, hey, we can comfortably custody these assets, it's going to take more from the circulating supply, making it more and more scarce. So this is massive. This is massive for crypto, and regulations are starting to change. Now then, Fidelity is allowing people to invest in cryptocurrency and put it into their pension funds. This is also another massive story showing adoption is here, and adoption is growing so fast. The price makes you think, well, nobody's interested. But all the big institutions out there are interested. Fidelity, who are they? They're one of the biggest finance companies in the world with $4.9 trillion worth of assets under management. They manage people's pensions, investments, all that kind of stuff. Now, what they're saying here is that it's not available in the UK. I think it's only available in America, but people are now able to put crypto in their 401k, in their retirement funds with tax-free advantages. But the reason why this is so massive is for two reasons. One, people investing in crypto for their pension, they're going to be buying it and holding it. They're not going to be trading it. So this just takes more crypto out of circulating supply, because this is long-term hold stuff if it's your pension. And a lot of the times, if you sell the stuff in your pension, you will get taxed on it. So the incentive is to hold it in your pension funds. So more money goes into crypto, gets locked up in these sort of funds. The other thing that's massive here, Fidelity is within the top tier of investment funds in the world. If Fidelity is doing this, you got to remember they all compete against each other to get as much money from you and I into their accounts as possible. If these guys are doing it, what do you think that does to everyone else? It makes everyone go, hey, what are we missing out on? Maybe we should look at this. How much interest is there here? And clearly there's enough interest that Fidelity decided to do this. Otherwise they wouldn't waste their time. So this is another amazing story showing that not just are we talking about banks getting into it, retail adoption, institutional adoption, we're now looking at crypto being able to be held in pension funds for long-term wealth gain. It's very interesting stuff. Mastercard's blockchain bet. This is a very interesting story, and a lot of people miss this because it's not that exciting and it doesn't translate into price action, but it does wake people up to adoption. This is a massive adoption story because one of the big things people say about crypto is, hey, you can't buy anything with crypto. It's a lot of things, I hear a lot of people say that. And it's like, yes, you can buy things with crypto, but there are a lot of friction points. For example, dealing with blockchain addresses, there aren't a lot of apps that are well known that allow you to do it. And there's not a lot of stores that easily accept crypto payments. However, there's a big shift going on around stable coins, banking system, and now Mastercard is getting into this. Now, what they're saying is they want to allow payments using stable coins. Why is that important? Well, what they're talking about is the idea of a Venmo app. And if you haven't used the Venmo app, it just makes it easier to go and pay for things. But a lot of stores accept this. But if Mastercard are trying to make a system where you can easily go into a store and buy things using stable coins, but not realizing that stable coins are built on cryptocurrency blockchains. So there'll be a situation where people are using stable coins and not even realizing that they're using cryptocurrency. Now, why is this important? It's because it moves us more towards using crypto blockchain. So whenever you're sending stable coins backwards and forwards, buying things, you are using the network. And a lot of time there are transaction fees. A lot of time those are burnt from circulating supply. For example, Ethereum and XRP, if you're using stable coins on that network, there is a small percentage of the gas fee that is burnt. Now, that blows the mind of a lot of people because you really have to go into how cryptocurrency and blockchain works to really get your head around that. For those of you that have been in crypto for a long time, you will understand that, but newcomers coming into it, it doesn't really make too much sense. But essentially, you're going to be using cryptocurrency to make payments, and it's going to be a lot easier than it has been before. They are talking about just stable coins at the moment. It's not really using Bitcoin, Ethereum, all that kind of stuff. But it is moving in the right direction. And if they're able to set this up to the point that it's really easy for normal people to go around buying things, where do you think all this is going to go? This is genuine use case for blockchain technology. And if you follow what's going on around the world, stable coins are becoming massive. They were never really the big deal, but they're starting to become that at the moment. Because you heard Trump come out recently and say, quite literally said, we're wanting to push stable coins because it pushes the US dollar dominance around the world. Because it does. You don't need a bank account to hold stable coins. You just need a digital wallet. So in countries around the world where it's very hard to get a bank account, it's difficult for us in the West because it's always been relatively easy to get a bank account. But for a lot of countries, they don't have their ID. The government is quite corrupt, won't let them have a bank account, imposes restrictions on where they can spend their money, but also they become trapped in their currency. But if you can use a dollar-backed stablecoin anywhere in the world with the value pegged to the strongest currency in the world, it becomes a really interesting use case. So, and also with stablecoins, you get payment and settlement in an instant. Now, I explain this on my course. It is a bit of a weird concept, but when you send a payment in your bank, a lot of people will say, well, the money's arrived straight away, so why is there a use for cryptocurrency? But what you're actually seeing is just payment. You're not seeing settlement. So if you think the banking system is just a messaging system, so it'll send a message to another bank account saying, this money has been sent to you. However, the actual money doesn't get settled, and this is why you hear things like 3 to 5 working days. There are costs involved in that. The banking system ends up incurring a lot of that cost. Also, for certain accounts, you will pay a certain transaction fee. So it does add up, and the cost of this is billions and billions and billions, and that cost gets passed on to the user. But if you're using stable coins, you can get rid of all of this stuff because it's payment and settlement in an instant. So when you understand how the banking system works and understand how money works, you can see that this is the upgrade to the financial system, and it is going to go in that direction, and it's all built on blockchain technology. Ripple and XRP news here. So the RLUSD, its adoption is exploding at the moment. Now, it has just been listed on Kraken, and its volume is going through the roof at the moment. And this is absolutely amazing for the company Ripple, but also the stablecoin is built on the XRP ledger, and it is also being used on the Ethereum network. Now, the volume is slightly higher, or well, it's a lot higher on the Ethereum network at the moment, but it is also growing on the XRPL, which increases the amount of volume that is being used on the XRPL. The thing that's really exciting about this, okay, I heard someone the other day say the burns don't really matter, but they do. There's a small percentage of XRP that is burned every time a transaction using RLUSD is sent. It is a small amount, but as adoption grows and grows and grows, more burns will happen. But also, if you're a bank or an institution and you're going to be using RLUSD, you're going to buy XRP and hold it to be used in those transaction fees. And also, you're aware that the value of XRP is going to go up. So it is in your interest to hold XRP. But if you're going to buy it and hold it to use in transactions, you're not likely to be trading it. So it takes more XRP off the market, which means the price is going to go up. But it is showing adoption here. And I have been quite surprised how quickly RLUSD is growing. They are doing it slow and steady, which is the best way to do it, because if any of you were around when Terra Luna and UST was around, wow, that's really caused a problem, and I will never forget that one. I think most people got burnt in that one. But more news with RLUSD, and it's very interesting here, is so Ripple are doing a pilot for relief effort in Kenya. It's interesting because obviously we're seeing stablecoins explode as one of the leading narratives at the moment in cryptocurrency because it makes sense. It's payment and settlement instantly. It's far more efficient than using the traditional financial system. And there's other things you can do with this. So as we all know, the blockchain is open to anyone. You can see where transactions are going. Now, one of the biggest problems with a lot of countries that are developing is corruption. If you send money to a country, you don't know where that money is going to go. But using blockchain technology, you can see that you're definitely sending the money to the right person. And then you can keep an eye on where it goes after that. And then you can do a bit of research into it and realize if they are funneling the money into any kind of corruption. So stablecoins have got an interesting use case here that you will be able to stop corruption. But it's very interesting to see that Ripple is taking this approach. But again, if Ripple can do this to developing nations around the world, you can imagine how much adoption of RLUSD there will be, and then that gets people looking at XRP. Now, XRP has held up pretty well with the price action recently, and you can see that this is a crypto project and a crypto company that are actually starting to have a real use case. There's a lot of crypto projects out there that it's all hype and speculation, and there's no real utility, there's no use case. And a lot of talk is about, are we going to go into a utility bull run? Maybe. When things like this are happening, it makes you think, well, there is a good use case to be able to use the XRPL with stablecoins. So it's not just about price action, this is adoption, and they're really trying to expand and grow. But also, if you look at the supply of RLUSD, it is now at $293 million, and it's growing fast. It really is growing fast, and they have facilitated around $10 billion since their launch of transactions, which is absolutely amazing, and that shows how quickly they are moving. So there is some XRP RLUSD news. Okay, so let's finish off with this. Money is scared at the moment, and it is just trying to find safety, and it's trying to work out the best ways to do that. Stocks, absolutely not. Gold is looking a little bit sketchy. Money is going into bonds. Bond yields are coming down. Eventually, money is going to start flowing into risk-on assets, and it quite likely is going to avoid the stock market because of trade tariffs. Who really knows how this is going to play out? But as you can see, although price action might be slow, it is holding up pretty well. And also, there's all this adoption going on. Just remember, when you're investing in cryptocurrency, you're investing in the future price. And the future price will only go up if there are adoption. Now, if none of this stuff was going on in the background, maybe there's a time to be worried. But you can see all the big institutions, all the big players are putting in the infrastructure to be able to use blockchain technology and cryptocurrency in the future. So we have a lot to look forward to. Now let's finish off here with a nice video of the man, Michael Saylor.
And here's the way I would say it. The difference between money and speculation is, if it's money, then the largest holders are buying more. And if it's speculation, the largest holders are selling. So the real issue is, are the hodlers buying or are they selling? I'll give you an example of great asset classes that are money. Apple stock is money. Apple is buying more, and a lot of people that own Apple stock will buy more. New York City real estate or London real estate or Palm Beach real estate, luxury real estate is money. Because if you look at wealthy people, they're not selling. There's no one bragging about how they sold all their nice places in Palm Beach, New York, and London. They're buying more, right? If you've ever met a rich family that has real estate holdings, they don't sit around saying, yeah, we're going to diversify and we're going to sell next year. We're going to get rid of the entire portfolio at a huge profit over 10 years. What they say is, I'm looking forward to the next deal where we're going to acquire this building, or we're going to buy this other thing, right? They buy and they hold. And they typically buy and hold to give to their children's children, right? The same is true with art. If it's good art, collectors, Frick, Andrew Mellon, they didn't buy art to flip the art, right? They're not speculators. I bought a Picasso so I could sell the Picasso, right? They wanted to buy them all. That's why they call them collectors. So if something is deemed to be really valuable, you bought $1 billion of it, and your goal is to buy another $1 billion of it. And so if you think about all these things, which thing in the crypto ecosystem is that, right? Bitcoin is that, right? I bought a bunch of Bitcoin. My goal is to buy more Bitcoin, right? It's just a very simple acid test. Do you have an exit strategy, or is that the exit strategy?